at least for now. Okay, I will share my screen. Yeah. So first of all, I want to touch on the dollar, which is looking amazing. And like Rafael said, it's hard to expect things to change. I just wanted to mention one thing that from momentum score perspective, I'm already starting to receive overbought signals in the medium term, which is of course what is expected after such a move. And good news is that in the short term and in the long term, it's still not overbought, so things can continue to rally. I just wanted to really mention that. And of course, always respect the trend. So the perfect example is good old euro dollar, which I rarely show forex pairs, but it's one that when this move happened, we all know the reason, or at least the narrative, which was the election. But even before that, it was a bearish trend. So for those people who monitor currency pairs or trade dollar in general, if you follow the signal, you should have been long dollar anyway. So this is, I hope that people made quite a lot of money doing that. Yeah, but the beginning of my presentation was just to show UUP momentum score, 30-day momentum score, which is 2.5, which for UUP is very, very, very strongly overbought. Now, let's move to one of the favorite tools. I wanted to touch on the correlation, which is also quite different from what I was talking in the previous shows, which is a correlation within TLT and XLU. So we all know about the defensives, we all know about the rate-sensitive sectors. This thing is clear, but look at the short-term correlation between TLT and XLU, which is 0.8 positive. And 15 days ago, it was the short-term correlation was almost non-existent. Of course, positive correlation between these two is quite normal, but we have quite a big moves up in that correlation. So 30-day correlation 30 days ago was 0.25, but now it's 0.4. 10 days almost have not changed from 15 days ago, but this is important. So now 3 or 4 shows ago, I was talking about the potential and of rotation to defensives. So now it's clear that the signal was correct. 2 weeks or 3 weeks ago when we did our last show, there were some doubts, but at least now things are clear. So definitely we are in the risk-on environment. For now, I will address a bit later on my positions and whether I think this move will continue or it's a bull trap, which is, of course, the most important question, at least for now. Like Rafael said, he believes that market will suck more people in. I kind of agree with that, but yeah, this price action in XLU just proves that now rotation is over and now we have a completely risk-on scenario here. So my views, first of all, my views on what happened and what I think will happen in upcoming couple of weeks. I'm bullish, really bullish, and now I'm long. I will touch on my positions a bit later, but yeah, I don't expect same as Rafael. I don't expect a big move down, so like a crash now immediately in the very short term. So let's say 1-2 weeks. I definitely don't expect that. But I'm not really happy that I'm long. It's good to have green positions riding with the markets, but I think that we will get a bull trap. I think that we will get a shakeout, but also I think that it will happen in January or in Q1. So on this, I totally agree with Rafael. But like I said, the way I trade and the way I manage my risk and the way I think about my exposure, it's hard for me to be very happy riding this because I think that not for long, but in the short term. So now we're usually talking about 2-week increments. I don't expect. So my position from risk management perspective, I chose options, of course. So I bought debit spreads the next day after the election. It's a December expiration. I'm using futures on options because they are even more efficient, in my opinion, than equity options from capital perspective. But yeah, basically, I have call debit spreads. I bought them quite high because we all know that the market was grinding higher all night during the election results. And I spent all night in the office trying to trade, and actually, yeah, I was expecting a dip, and dip never happened. So basically, I spent the entire night in the office and basically had no trades there. Tried here and there, but it was yeah. So after election was over and situation got clearer, I bought ES, NQ, and NVIDIA. Yeah, so NVIDIA is equity options and ES and Q is future options. For future options, it's December contract expiration date, dated options, and for NVIDIA, it's a December monthly expiration options. For ES, my width of strikes is 100 points. For NQ, it's 500 points. And funny enough, at least for NQ, there was a point where basically even my short option was in the money already. Of course, now we had some correction, so we will see how it goes. Yeah, but I'm happy with my positions because I would not be confident and happy to just hold either futures contracts or, for example, SPY QQQ or other assets outright because of what I said a little bit earlier about the potential bull track. But yeah, I think we still have time. My spreads also have a lot of time. Why NVDA? I'm definitely not trading things like Tesla, even though a lot of people will say that Tesla was the thing to trade, and that the winner of the election is not Trump, but Elon. But yeah, NVDA, I think that the demand in chips and also their cash flow perspective is quite fine, even with this insane valuation. So from these magnificent companies, I chose that, and it's not the first time I talk about this company during our shows. Yeah, so these are my positions and my view. I don't expect a crash again. Just to remind what I was talking about in our previous show, that basically I said that for the next couple of weeks, I was expecting markets to stay in the range. I was also not expecting a big crash, which of course have not happened. But basically, we had what happened is almost what was expected. Markets spent their time in the range before elections, and of course, after elections, we all know what happened. And now nothing is missing because I was always talking about that. Okay, so ES made a new all-time high. our single equity names made all-time highs, but NQ was lagging, always lagging. So, well, yeah, now we have everything. We can check all the boxes. NQ is also trading in the uncharted territory, so everything is looking very strong. Yeah, but in the previous show what I said. So now I don't expect range. I expect either slow grind higher or in Q1, like Rafael said, we can get a real bull trap, which we will get. It's always how markets work, but the question is when, and no one knows. But I see no signals. I see no signals apart from things being at the top end of the regular ranges just because of this big move that happened. I see no signals to be really worried about. Correlations, when we talk about correlations, I mean, average sector correlations are extremely low. It means there is no concentration in the markets. We are not seeing high correlation. So basically, market has a lot of its way to go. That's what I think. Of course, in 2023 and 2024, we had amazing years. So a lot of people will expect 2025 to have also insane returns in S&P 500 and Nasdaq. We'll see. I think that we will get a dip. So yeah, I wanted to touch on TLT XLU correlations, the end of the rotation, overall bullish bias, but let's call my bullish bias with medium confidence, not really strong confidence. That's why I chose to play safe. Yeah, that's it from me. Monitor correlations. I think that is the most important tool, at least right now, because if we see any strengths in defensives again, and also if we see any weakness in the dollar, which I doubt, on the latter I really doubt, then it can really help you to get out of your positions and save you from losses. Yeah, so that's it from me.
Yeah, I agree with you, Vi. I think it makes sense to watch for a top in dollar and probably a bottom in bonds before we can consider some kind of top in equities.
Yes, these, and I always add to this list defensive sectors, because over the years of my trading, even though there are periods when I don't trade things like the XLU for years. Of course, I had this position that I closed a month ago, but even if I don't trade those, I always watch. So defensives, I mostly like XLU, bonds, and the dollar, of course. Some people watch yields. I watch ETFs or futures on things like ZB, NUB, and so on, which basically is the same thing, just moves in the reverse. So whichever you prefer, but these are important. And the reason why before the show I asked you about the bull trap, because that's what I wanted to discuss on. And now I think that our views are quite clear, because I spent almost in a week now just thinking, yeah, so entered those long positions, managed my risk with options, everything is fine. But I was thinking just how long it can go, because why it can go, because market was waiting for election results for quite some long time, at least in NQ and yeah, so tech related things, because NQ consolidated for months and months and months, and now elections are over, so there are more clarity. So that fact that market spent quite some time in this range, even though the range was bullish, but still, let's call it a wide range. The fact that market spent a long time there actually can give some fuel, and people who were on the sidelines or people who were not sure, maybe they are now sure. So yeah, it would be actually quite crazy to not participate in this rally. That's why I have these positions. I know that there is also another side of the coin. So people and macro analysts and traders on Twitter, of course, you never know who is who on Twitter, who is trading or who is tweeting. But people are actually selling their positions, trying to short the market, and so on. I want to be like a broken record, but repeat the same thing over and over every single show. I mean, the stupidest idea you can do usually in the markets is short the markets when markets are going up, and especially with this steep angle like we are doing now. Selling some positions or reducing exposures. So okay, I mean, I'm fine with that totally. And you all know that there are plenty of times when I just say that I have no positions because I don't. But shorting market, no, it's terrible idea. Even if buying puts to hedge your long positions when you have long positions is fine. But when people tweet that I sold everything and bought puts, well, yeah, you just booked some gains, you will pay taxes, and now you are using that money to buy puts, and these puts will be worth zero. So basically, you will lose what you made. So good luck. That's what I think.
I saw one guy who did that, and he was basically saying, "I'm going to lose 5% of my money just in puts." Made absolutely no sense.
Yeah.
And he had like 1,000 likes. I was like, I don't understand. I mean,
Another thing that now is almost the end of the year. So these people who have big gains, and I mean, there are a lot of people who have big gains because what even indices are up, I don't know what, but 25, 20 something percent, some crazy return. I mean, a lot of smart people will sell in January, not in December, just for taxes and for other reasons, and or when it comes to institutions, when speaking what I like to sometimes do in my own portfolios, they will now we're entering a so-called collar trade, where basically you sell a call and use that money to buy a put. Basically, you locked everything, but you don't have to sell your position. So basically, there is no taxable event or something like that. So that also can keep market quite stable for a while. By the way, if you are interested in these option strategies that are related to not trading, actually, to not making bets on ranges or direction or something, but to just lock positions and just get more time without actually spending any money or spending literally cents on a dollar, we can touch on those sometimes in the future. But yeah, it's what, middle of November, and in December, people will sell losing positions, not profitable positions.